Welcome to the podcast, folks. Today we're diving into what's going on before every market crash. That video title really grabs your attention, doesn't it?
Absolutely. It's like a wake-up call reminding us to pay attention to market signals.
Right, and the video, as it lays out, covers a whole range of symbols, calendars, and news elements that hint at an impending downturn. It's interesting how these calendar symbols are used as markers before a market crash.
Yeah, it's almost like a secret code, isn't it? Can you walk me through what these symbols basically represent?
Sure. So, the symbols act as a sort of indicator, dates or patterns on a calendar that historically, when certain configurations appear alongside news events, tend to precede a market crash.
Yeah, exactly.
It's like reading the market's pulse.
And then there's the whole aspect of how news and social sentiment factor in, right?
Yeah, exactly. The video shows that the build-up to a crash isn't random. It's often preceded by a mix of bearish sentiment, tech stock declines, and even significant moves by key players, like executive departures at companies such as XAI.
Right. Speaking of XAI, how do you think the departures at that company might affect its stock price?
Well, departures of high-level execs often make investors nervous. Yeah, they can see that as a sign of internal instability. It might bring short-term volatility, but if the market has other robust drivers, it could stabilize quickly.
I agree. Fair point. Now, the video also touches on tech stocks rallying. What do you think are the factors that could lead to a sustained tech rally despite the looming crash signals?
That's a good one. It's a kind of double-edged sword. On one hand, tech stocks can rally if, say, there's strong earnings reports, breakthrough innovations, or government stimulus. On the other hand, external factors like geopolitical tensions or failing market fundamentals can override that momentum.
Exactly, yeah. So it's about balancing these internal strengths with the external risks, right?
Precisely. Investors need to consider multiple indicators simultaneously, and the video makes a solid case for using these calendar symbols as one tool among many.
Right. And what about that NVIDIA Intel pact? The video poses that as a potential catalyst in the tech sphere. How might that influence investor sentiment?
Yeah, that's a hot topic. When two tech giants forge an alliance, it can really shake up the market's expectations. It's like, imagine mixing a potent energy drink with a calm tonic. You get a cocktail of opportunities and risks.
I see your point. I like that analogy. But isn't it also possible, though, that such pacts might concentrate risk among a few major players while leaving smaller tech outfits vulnerable?
Absolutely, and that's a valid challenge. While the pact might fuel a rally, it could also deepen divisions in the sector. Smaller companies might struggle to keep pace if the market sentiment shifts too quickly, or if the dominant players face their own issues.
Right, that's a great critique. So, in that scenario, investors would need to balance the opportunities from larger players against the vulnerabilities of the smaller ones.
Exactly. And this is where diversification comes into play. Spreading risk across multiple tech stocks can help mitigate those concentrated risks.
Absolutely. Now, shifting gears a bit, the video asks if XRP could potentially rally to 450. What's your take on that in terms of market volatility?
XRP, that's always an exciting topic. So in the crypto world, we see a lot of unpredictable moves. If XRP shows momentum and there's enough volume, hitting 450 might be a psychological barrier that triggers further buying.
Yep, interesting indeed. But don't you think that volatility in crypto markets means such predictions are quite risky?
Sure, crypto is known for ups and downs. While $4.50 could be a rally level, it's also critical for investors to tread carefully and not put all their eggs in one basket. Classical market signals still apply, even in crypto.
Yeah, that's a fair warning. Speaking of risks, the platform also includes a disclaimer about the AI-generated content. How do you feel that affects how we should interpret these insights?
That's a key point. The disclaimer reminds investors that while the content is rooted in analysis, it hasn't been fully fact-checked by human editors. So it's like, a heads up to do your own research before making any moves.
Absolutely. Right? It's a reminder that in this digital age, even our trusted sources need a bit of extra scrutiny.
Exactly. It's like having a map that might have some outdated parts. Usefulness is high, but caution is crucial.
Right on. And there was that comment about someone capitalizing on bearish movements in MSTF stock using premium tools. How much weight do you put on these anecdotal success stories?
Well, it's anecdotal for sure, but it points to a broader trend. Investors leveraging premium tools can sometimes capture short-term opportunities. It's like having a finely tuned radar that picks up signals others might miss.
Yeah, I get that. But isn't there a risk that over-reliance on such tools can lead to ignoring larger market conditions?
Absolutely, and that's where the challenge lies. It's critical not to get tunnel vision. While premium tools offer an edge, they should complement, not replace, fundamental market analysis.
Definitely a balanced approach is key. Let me ask you this. In your opinion, do the video's insights reflect a broader narrative in financial media about predicting crashes? Or is it more sensational?
Good question. I think it's a bit of both. There's definitely a trend to use sensational titles to grab attention, but underneath that, there's legitimate analysis on historic patterns. It's like separating the wheat from the chaff, knowing which signals to trust.
That makes sense. Yeah, and it really emphasizes the need for investors to not just follow headlines, but to dig deeper into the data.
Exactly. And these kinds of discussions, especially around factors like tech consolidations, executive moves, and crypto rallies, show just how interconnected our markets have become.
Right, the interconnectedness is fascinating. As we weave through these varied signals, do you think there's a clear strategy that investors should adopt?
I'd say the strategy is multifaceted. Diversification, staying informed from multiple sources, and maintaining a healthy degree of skepticism towards any single source's predictions. It's like not putting all your money in one basket.
Exactly right. And with regulatory uncertainties, especially in crypto, that adds another layer to be cautious about, wouldn't you agree?
Definitely. Regulatory scrutiny can suddenly impact markets, making it even more important to balance risk with informed decision-making.
Totally. It sounds like the bottom line is that while these signals can provide guidance, no one prediction is foolproof, and investors need to stay agile.
Absolutely. That's the takeaway here. Whether it's early warnings about a crash, tech stock rallies, or crypto rallies like XRP to 450, the market is a complex dance of signals and noise.
Right, exactly. And it seems the message is clear. Keep your eyes peeled, question the signals, and always have a plan.
Yep, perfect summary. And always remember to verify what you see, especially with AI-generated content fueling discussions these days.
Indeed. Awesome. This conversation really illustrates how diverse factors like market signals, tech alliances, and crypto moves interweave to shape investment landscapes.
Exactly. It's about piecing together the puzzle. Calendar symbols, executive shifts, and even social sentiment all come into play.
Right, perfectly put. Thanks for this deep dive. It's a lot to chew on, but it definitely equips us with more context than just surface-level headlines.
Absolutely glad we could break it down together. And remember, folks, take these insights as a starting point for your own research. Stay curious and stay informed.
Indeed, thanks for tuning in. Until next time, keep navigating the ever-changing market landscape with wisdom and caution.